Welcome to issue number 33 of the UK Financier newsletter. This week, markets rebounded, inflation softened, and traders are eyeing potential rate cuts. Here's what investors need to know heading into a volatile week. Wall Street surged last week, soft inflation fueled bets on the Fed, and President Trump is heading to Asia. Let's break down what's moving markets. Global equities finished the week on a high. In Europe, markets rose across the board, led by banking and industrial stocks, buoyed by positive U.S. inflation data. In London, the FTSE climbed as easing U.S. price pressures and stronger domestic data lifted sentiment. Wall Street also closed higher, with major banks reporting strong earnings, giving hope that the Fed may pause rate hikes. Cooling inflation and steady economic indicators are setting a constructive tone as Q3 earnings season ramps up. Some key market drivers last week. The S&P 500 jumped 1.9%, the Dow gained 2.2%, and the Nasdaq rose 2.3%. Wall Street's best week since August. September's CPI came in cooler than expected, boosting bets on a 25 basis point Fed rate cut. Trade optimism returned as Trump confirmed a meeting with Xi later this month. Tesla hit record revenue, while Netflix faced one-off costs, and GM and Ford impressed investors. Softer inflation, strong earnings, and renewed trade dialogue fueled optimism heading into next week's Fed decision. This week also brought several economic headlines. The IMF upgraded 2025 growth forecasts, thanks to AI-driven optimism. The U.S. government shutdown hit week 3, delaying the 2026 Social Security COLA announcement. The U.S. budget deficit narrowed slightly, though tariffs and debt remain high. And U.S.-China trade tensions continue to influence markets. Inflation trends vary globally. Eurozone inflation rose to 2.2% in September. UK CPI eased to 3.8%, while Canada's inflation ticked up slightly to 2.4%. Investors are watching these figures closely as central banks react. Emerging markets continued their strong run, rising 1.7% last week and bringing year-to-date gains to 28%. India's Sensex hit new highs with festive spending and trade optimism. China slipped after softer Q3 GDP and trade concerns. Brazil rose 1% on commodities and policy optimism. Emerging markets benefit from weaker dollars, rate cut expectations, and attractive valuations. Diversified ETFs or regional funds like INDA or FXI offer ways to gain exposure. This week promises high volatility with major central bank meetings and key earnings. On Wednesday, the Fed is expected to cut rates by 25 basis points, and the Bank of Canada also meets. On Thursday, the ECB is likely to hold steady, while the BOJ remains unchanged. Earnings highlights include Microsoft, Alphabet, Meta, Apple, Amazon, and more, with big moves expected from tech and finance. Other notable stories: global agricultural markets face volatility from climate, geopolitics, and supply chain risks. Australia's bond market is surging as a safe haven for global investors. Want exclusive investment insights and daily summaries? Join our growing investment group for discussions, ideas, and deeper dives into top opportunities. That's your market snapshot for this week. Stay informed, stay diversified, and we'll see you in the next update.